is your still passionate friend, Alba Benítez from BMG Latin America, bringing you the key steel market insights for the end of September 2025. Let's dive right into it. The global steel market is still a bit cautious. Demand remains weak. Inventories are high and overcapacity keeping pressuring prices. Even though the global economy is expected to grow towards 2026, it still hasn't been able to progress yet after the slowdown in China and the 2024 recession. And speaking of China, things just got interesting this week. Beijing ordered a halt to all the seaborne iron purchases from BHP in US dollars. That move has rattled the raw markets materials, creating volatility and raising concerns about higher steel making costs. So, in the short term, we will see more prices swings and uncertainty coming out of Asia. Now, let's look at US. Hot rolled coil, Nucor has held spot prices at $875 per short ton for 6 weeks straight, while market indices from steel market update shows closer to $795 per short ton. This tells us the mills are defending margins, but they are not pushing for aggressive hikes because demand is just not there yet. Plate, this is where the drama is. Prices dropped more than $100 per ton since July, down to about $975 per short ton. But in late September, U.S. mills, Nucor, SSAB, and Oregon Steel announced $60 per ton increase effective for November orders. Is this sustainable? That is the big question. Why? Because the spread between plate and hot rolled coil is sitting around $193 per metric ton, right in the historical comfort zone. Mill sees that is defendable, but the problem is still demand, weak and cautious. Production cuts between October and December, mill outages could remove up to 700 tons of flat steel supply based on Metaminer data. That might give prices some support heading into 4Q, so the next quarter is crucial. Either we stabilize and see a rebound, or the mills attempt to rise prices falls flat. Across the Atlantic, Europe is struggling too. Based on fast markets information, the hot rolled coils offer hovered around 590 to 710 euros per metric ton, but real deals are happening much lower, between 530 and 580 euros per ton, thanks to cheap imports from Turkey, India, and Indonesia mills. Mills have thin orders booked, buyers are still holding high inventories, and everyone in Europe is waiting for the European Commission new trade measures on CBAM in October. For now, the mood is cautious, and the trend remains soft. In Asia, China's hot rolled coil prices are stuck around $500 per metric ton. High inventories keep a lid on any recovery. Vietnam is showing some positive demand, but India and Japan are weighted down by inventories and anti-dumping measures. Overall, Asia remains flat but volatile, especially with the iron ore disruptions that we mentioned earlier. Now let's head south. Mexico is playing defense. The government imposed tariffs of up to 50% over 1,400 Asian products to protect domestic steelmakers and position itself better in the USMCA negotiations. But internally, prices are falling based on flats. Hot rolled coil around 13,145 Mexican pesos per metric ton. Cold rolled coil about 15,900 pesos. And rebar is holding steady near 13,800. What is driving this? Weaker demand in construction and industry, declining exports, and cheaper scrap costs are pulling down the floor lower. So Mexico, like a U.S. is in bearish mood for now. What does those all mean? In the short term, both the U.S. and Mexico are under pressure. Mills are attempting to stop the slide with price hikes, but the demand hasn't been up to speed. Europe is stable but soft, and China is shaking raw materials markets, adding more uncertainty. In the medium term, looking to 2026, Fed rate cuts, infrastructure spending, and manufacturing recovering could support some growth, but the risk is overcapacity and excess inventories are real. And for you, the opportunity is clear. Secure flexible contracts and think about pre-buying in early 2026 when growth is expected to pick up. This has been your update for September 2025. I am Alba Benítez with BMG Latin America. If this helped you to make smarter supply chain decisions, don't forget to subscribe and hit the bell so you don't miss the next update. See you next Monday with more insights on the steel market. God bless you.